Ever wonder how Fortune 500 executives accumulate massive wealth while paying proportionally less in taxes than you do? It's not magic, it's not illegal, it's not offshore accounts or shady loopholes. It's executive compensation strategies that have been standard practice in corporate America since the 1950s. And here's the thing most business owners never realize. If you own an S Corp, a C Corp, or certain LLCs, you have access to many of the same tools. I'm Joey, co-founder of Preserved Wealth Group, and let me show you how this works. When large corporations want to attract and retain top executives, salary alone isn't enough. Think about it. When you're already in the top tax brackets, another dollar of salary means giving 40, 50, or even 60 cents of that to taxes when you combine federal, state, and payroll taxes. So what do those large corporations do? They develop sophisticated compensation packages that go far beyond salary, things like executive bonus plans under IRC Section 162, which has been in the tax code since 1954. Or deferred compensation arrangements, allowing executives to defer income to future years. Supplemental executive retirement plans, so the SERPs. So these are retirement benefits beyond what qualified plans allow. Split dollar life insurance arrangements, where the company and executives share the benefits of the life insurance policy. These aren't fringe benefits or loopholes. They're fundamental tools of executive compensation that every major corporation uses. This is how you see executives building wealth that seems disproportionate to their salary, because a significant portion of their compensation isn't showing up as taxable income in the same way. The strategies are completely legal, they're written in the tax code, and they've been used for over 70 years. Now, here's the insight I want you to have. If you currently own an S Corp, a C Corp, or certain LLCs, you are an executive of your own company. Crazy, right? You're not just the owner, you're an employee as well. You're likely an officer, so the CEO, COO, president, or whatever title you've given yourself. And that means that the same categories of strategies that Fortune 500 companies use for their executives can potentially be structured for you. The scale might be different, obviously. A Fortune 500 executive might have millions or tens of millions of dollars flowing through these structures. You might have tens or hundreds of thousands of dollars flowing through these structures as well. But the fundamental mechanics are similar. Under Section 162, your business can pay you a bonus that funds a life insurance policy you personally own and deduct it as executive compensation. Under Section 412, you might be able to set up a defined benefit plan with contribution limits far beyond 401ks. These are the same categories of strategies the Fortune 500 uses, just scaled to your business. So, why do few business owners know about this? Think about how you interact with your current advisors. So your CPA probably just focuses on tax compliance and the strategies within their expertise. They likely don't have an insurance license, so they can't implement insurance-based strategies. Your financial advisor probably recommends 401ks and IRAs because those are the tools they're trained and licensed to offer. And your insurance agent maybe just sold you a simple term policy years ago, but likely don't understand advanced tax planning. So none of these professionals are giving you the full picture, not because they're bad at all their jobs, but because the full picture requires expertise that crosses professional boundaries. Fortune 500 executives benefit from entire teams of advisors whose job is to optimize their compensation. They have tax lawyers, compensation consultants, insurance specialists, all working together. Business owners, well, you typically have to find this expertise yourself if you even know it exists. So the good news is that you're halfway there. Now at least you know it exists. So what I just shared is a conceptual framework, but there's a lot more to understand, like the specific tax code sections and how they work together, the difference between tax deferred and tax-free. This is crucial. Who actually qualifies for these strategies, how to find professionals who can implement them, So I break down the complete picture in my full free training video, which is the complete tax-free wealth playbook for US business owners. It's about an hour long, and I go through everything: the tax code citations, the mechanics, the qualification criteria, and what to do next with the information. The link is right in the description below this video, or you can find it on the channel. So if you're a business owner paying significant taxes and you've never heard of any of this before, then that video will probably change how you think about building wealth and keep more of what you earn. Please subscribe for more content like this, and I'll see you guys in the next one.